Hey guys, it's Jeff with Simply Derivative, and here's today's daily recap video. Hope everybody had a good weekend, 3-day weekend. It was a busy day to start the trading week. Let's just get right to it. Equity saw a pretty good pullback today. Right now we're looking at the ES specifically, and we had a nice down move. We were down, about 1.5% on the day. Dow was the biggest lagger. It was down almost 500 points at one point. The YM, and as typical, they bounced a little bit into the close, but we had a nice level on the ES, a 60-minute chart, for a long opportunity that we took in the morning. As our day trade, and took a few points out of the S&P, and that ended up working out for us. As you can see, we bounced from about 2677.5, and we closed at about 2692. And so definitely some good volatility and some good movement today in the markets, specifically these equity indices, the E-minis. What else happened? Rates basically dumped almost close to 6% on the 10-year. We're back below 2.8% on the 10-year. We were last week, 2 weeks ago, above 3.1 briefly, and have turned away from that level, as you can see on a bigger time frame. On this weekly, we had cleared highs back from 2014, and actually got a decent way into this zone up in here, but turned away pretty nicely, and we're back below 3% on the 10-year. And so yields are going to definitely compress, and so we'll see how this plays out in the coming weeks with equities. And I guess what's going on with Italy, and what's going on over there in the Eurozone. So it's affecting U.S. markets as well. With that, rates tanking, bond futures, specifically the 10-year and the 30-year, just skyrocketing. They've been rallying up this past week and a half, but today you saw a huge gap up in the same direction up off this daily chart, and it's just been a monster rally in bonds. That's what's been pushing down rates, vice versa. They're inversely correlated, so you're seeing this type of reaction in this market. And then crude oil has been moving as well, and crude oil has been moving as well, and has pulled back from its highs. It got close to $73. We were expecting it maybe to get up a little bit higher, up into $73.50 before pulling back, but it actually did it before this bigger daily zone, and you can see it's pulled back about $7 from its recent high, and so it's a decent sized move. We have our eye on the 63 area in crude oil. We'll see how this plays out. It is pausing at the moment, but this could just be a pause and hesitation before a further drop into this bigger zone. So crude is something that we're keeping an eye on this week as well. And last thing that we're going to look at is the VIX. The VIX at one point was up over 40% intraday. Here on this cash VIX market, we got as high as about 1880 on the cash VIX. VIX futures got above 1617, I think, as well. And so with equity pullback, you're going to see this nice move. And so VIX was up at least, or up over 40% at one point intraday, and it pulled back slightly into the close, about $1.50. Finish up 28.5% on the day. And so we're going to see if this continues. We do see some wicks up here on the VIX daily above 18. We'll see if we can sustain this higher level of VIX and maybe push back up towards the 20s on the VIX, which would translate on the S&P, specifically in the majors, being down closer to their 200-day moving averages again, which is down at 2636.50 on the ES. So a couple of levels to pay attention to going forward is going to be this 2670 area, and then Below that, the 2650 and 2630 are two key areas where we'd be looking at on the ES. Other than that, like I said, guys, it's been a busy day, a busy market, so we expect that to continue. Make sure you're using your stops. Make sure you're waiting for your setups and following your rules, and be patient. Wait for the trades to happen, and then pull the trigger. So that's about it for today, guys. Check out our site and YouTube channel for a blog post coming out later this week. It's on one of our favorite setups. It's a reversal setup, but we kind of break it down, and we got some examples and stuff like that we go over in the video. So be sure to check that out. It's coming out later this week. And check us out on social media. Subscribe to our YouTube channel, and we'll see you next time. Have a good one, guys.